We employ a research-intensive, fundamentally driven investment process. Ideas can come from anyone on the team, and we'll consider a wide range of sources, including quantitative screens, respected industry peers, third-party research providers, industry conferences, and other avenues. We view ourselves as owners of every business, and so we perform a fundamental analysis of the company and the industry. Our starting point is usually the company's regulatory filings and investor communication, which allows us to form a preliminary opinion of the business and a view of value. Once we've obtained that, we'll typically look to sell-side research, more with a view of assessing the market's expectations relative to our own. In addition to detailed financial statement analysis and valuation, we're also working hard to assess things like industry dynamics, the durability of any competitive advantages, the track record of capital allocation, governance, and the alignment of management with shareholders. We also try to gain additional perspective through speaking with management, as well as customers, suppliers, distributors, and even competitors. Our core long positions will generally fall into one of two categories. The first is what we call long-term compounders. These are outstanding businesses with sustainable competitive advantages and management teams that have a proven track record of allocating capital wisely and whose incentives are very well aligned with creating long-term shareholder value. These unique companies are seldom cheap, so the best opportunities are when the market either undervalues or underappreciates the durability of the competitive advantage, or they sell off in sympathy with a broad market correction. The holding period on these kinds of investments tends to be fairly long and would be measured in years and not months. The second category are what we would call special situations or value with a catalyst. These companies are typically not as unique as the companies in the first category, but are substantially mispriced or misunderstood by the market. We need to develop a differentiated view of value from the market and the confidence that we've identified catalysts that will help to unlock it. Usually the disconnect surfaces as a result of things like increased complexity, an imbalance of buyers and sellers, a lack of institutional ownership or research coverage, and in many cases we actually act as the catalyst. We'll work with management teams and boards of directors to help them surface value and/or do a better job of articulating the story and the risks and opportunities facing the company to the market. Our short book is designed both to mitigate risk and also to generate alpha through a cycle. We're looking for businesses with fundamental attributes that would essentially be the opposite of what we're looking for on the long side of the portfolio. So you can imagine companies with secular headwinds, undifferentiated products, poor competitive positioning, and dispassionate management teams with a poor track record of capital allocation. On both our long and short investments, we're ideally looking for an asymmetric return profile where the potential upside is dramatically larger than the potential downside, and the estimated annualized return over the expected holding period is above a certain minimum threshold. To the extent we can construct a portfolio of those asymmetric return profiles, we think we should be able to deliver on our goal of generating strong, absolute, risk-adjusted returns with low volatility and minimal correlation to the equity markets.